One of the most common questions I hear from buyers looking at homes in our 55 and older communities is, can I really get a mortgage if I'm already retired? Well, the answer might surprise you. So in this video, I'm going to answer some of the most common questions I hear about applying for a mortgage if you're already in retirement. Hi, my name is Casey and I'm a realtor here in Corona. And on this channel, I share information about the housing market in the communities of Trilogy, Glen Ivy, and the community of Terramor. And if you find this kind of information helpful, I'd really appreciate if you hit that like and subscribe buttons below. This really does help my channel and it gets my information out to other seniors in the area. Okay, so let's get started. I do get a lot of questions from buyers looking for homes in our 55 and older communities. And a lot of these questions have to do with financing and mortgages. So let me share with you some of the most common questions I hear from seniors that are considering buying a home and taking out a mortgage. Number one, is it a bad idea to have a mortgage in retirement? Now, there are a lot of opinions on this one. Many people feel that you should try to pay off your home before you retire. And this is because monthly mortgage payments are often very high, especially in places like California. And having a large mortgage payment can make it difficult to budget and live comfortably in retirement. But the reality is, completely paying off your mortgage before retirement isn't always possible, and it's not always the best idea either. You don't want to deplete all of your savings, retirement funds, or investment accounts just to pay off your mortgage. This could put you in a bad financial position later, and it might actually make it difficult to cover your monthly needs during retirement. Plus, withdrawing money from some type of investment accounts can have serious tax consequences too. Another thing you'll want to consider before deciding on getting a mortgage is your spouse or your partner. What would happen if one of you were to pass away? Would this affect the survivor's ability to repay the loan? Would your surviving spouse or partner be able to afford the payment? Do they have life insurance that could be used to cover the difference? Or will there be other funds available to help cover this mortgage? If not, then taking out a mortgage during retirement may not be the right financial decision. Ultimately, this decision really comes down to your individual situation. So if you're not sure what's best for you, I always recommend consulting with a financial advisor or a tax professional. They really are the best resource to review your circumstances before making this final decision. Number two, can you really get a mortgage as a senior? This is one of the most common questions we hear, and the answer is yes. Lenders definitely provide mortgages to seniors. When a lender determines a person's eligibility for a loan, they consider a wide range of factors, but your age isn't one of them. In fact, age is one of the protected categories specified by the Equal Credit Opportunities Act, which makes it illegal to discriminate against a person based on their age, race, religion, national origin, sex, or marital status. But keep in mind that a lender can ask about your age on a mortgage application, but only for the purposes of gathering demographic data. And this information is kept confidential and is not used as a criteria to approve or deny a person for getting a mortgage. Number three, is qualifying for a mortgage harder for seniors? Well, it can be harder for seniors to qualify for a mortgage, but it's not because of their age. To qualify for a loan, lenders have to look at the same qualifying factors as every other borrower. Things like your total assets, your debt to income ratio, your credit scores, and your income. And income can be an issue for seniors. Most seniors transition to a fixed income during retirement, so it's likely their income won't include overtime, bonuses, or pay raises. So just keep in mind that you still have to meet the lender's standards in order to qualify for the mortgage. Number four, how do you qualify for a mortgage if you're in retirement? Well, as I just mentioned, lenders look at the same financial criteria as they do for other buyers. So seniors will have to submit the exact same documents to their lender when applying for a mortgage. Things like your bank statements, investment account statements, 401k statements, or annuities. And they'll also look at your credit history. Your credit scores will determine the interest rate you qualify for. And the higher your credit score, the better the interest rate you'll receive. And the lender will definitely take a close look at your debt to income ratio. Some lenders will allow debt to income ratios to be as high as 50% of your income. But for seniors, they'll likely want this number to be much lower. And this is due to the fact that your income will likely be fixed. But one of the most important things a lender will be looking for is to verify your income. Now, if you're still working, that would include pay stubs, W-2 statements, and your tax returns. But if you're already retired, they'll need additional information too. And this could include your investment income, like capital gains, dividends, distributions, and interest income. They'll also consider any income from a pension, 401k, or Social Security too. And number five, what types of loans are available to seniors? There really are a lot of options available to seniors. In fact, the same loans are available to seniors that are available to any person applying for a mortgage. So that includes conventional loans, FHA loans, and VA loans. And the terms of these loans can vary too. Most traditional loans are for a period of 30 years, But we often see seniors with larger down payments opt for a 10-year loan or a 15-year loan. And another popular loan for seniors are reverse mortgages. Now with a reverse mortgage, you actually borrow money from a lender based on the equity you have in your home. And the lender sends you money, either in a lump sum or in monthly payments, to provide you with additional income in your retirement. And to qualify for a reverse mortgage, you must be at least 62 years old, and you have to live in the home as your primary residence. These loans are popular with seniors looking for additional income in their retirement. But it's important to remember that with a reverse mortgage, your lender adds interest each month to the balance of what you owe. So over time, the amount of equity you have in your home actually decreases, and this balance has to be repaid to the lender either when you move or when you pass away. Some people really like reverse mortgages because it provides them with additional income as they age, but others don't because it decreases the equity in their home, plus it puts their heirs in the position to have to pay off the loan balance when you pass away. So if you're considering a reverse mortgage, you'll definitely want to do your homework and consider the pros and the cons before making a decision. So the truth is, seniors with good credit and sufficient income and assets can get a mortgage, but it's important to have a long-term plan, explore all your options, and have a clear picture of your finances. And it's never a bad idea to consult with a financial planner or a tax professional for help in making this financial decision. You'll definitely want to do what's best for your individual situation.